Hey folks, Jason Dynison here with this little video about the Corporate Transparency Act and beneficial ownership rules. I'm doing this in video format because that might help a little bit with wrapping your head around this on what it is. I did send some bullet points out in email format to clients as well. So I'm sharing my screen. I have a little PowerPoint. I know sometimes PowerPoints can be a little dorky, look at my PowerPoint, but I thought that it might help to just walk through. There's 6 slides in this deck and not really that many words. But I thought maybe this would help to kind of explain some of this a little bit better. So what are we talking about here? Beneficial owner reporting. This is something that Congress came up with in a law called the Corporate Transparency Act. And it requires a filing by all businesses that are entities. And don't let that name Corporate Transparency Act fool you, because it's not just corporations that need to file this. LLCs as well. Even a one-owner LLC would need to file. If you're a sole proprietorship or a partnership without an entity, you only need to file if you have something that you have filed with the Secretary of State, like a DBA, doing business as, or something like that. However, I cannot advise you on this, so you need to talk to your attorney. All of this is talk to your attorney stuff, really. I have a slide about this in just a minute, but accountants, we're kind of in a strange position on this. Accountants actually cannot do this report for you because it's the practice of law. However, accountants are the people who are kind of on the front lines of this, having to tell people about it. So that's what this is all about. I'm informing you about it, but you need to talk to your attorney if you have specific questions on this. This is required under the Corporate Transparency Act, and you file not with the IRS, but with FinCEN, the Financial Crimes Enforcement Network. So this report will provide information about your entity and about beneficial owners of your entity. And these are things where you either need to talk to an attorney about the definitions or read the frequently asked questions on the FinCEN website. So if your business existed before 2024, your first report is due January 1st of 2025, which really means it needs to be filed in 2024. What that means is you don't have to jump on this instantaneously. If you're watching this in January when I'm recording this, you have almost all year to get it done, but you do need to be aware that it needs to be done. If you form any kind of new business this year, however, you have a much shorter time horizon to file your first report for that entity. You have 90 days after formation. And then starting in 2025, if you form any new businesses, you must file within 30 days of formation. This is not an annual filing. It's a one-time filing, and then you don't have to file again unless something changes. And if something changes after the initial filing, those changes must be reported within 30 days. So accountants cannot file these for you. It is considered to be the practice of law. If you look on social media about this, you will see some accountants saying that they're doing this. However, in the continuing education that I've taken on this, it is highly recommended that accountants don't touch this because it's considered the practice of law. And in fact, malpractice insurance carriers are saying that they will not cover accountants who do this filing. And on the next slide, we're going to look at what the penalties are. The penalties are massive if you don't file or if there's errors or anything. So accountants are not going to touch this. I'm not going to touch it. However, we're in the strange position of being like the trusted advisor for businesses. And so we need to tell you about it. So I'm telling you about it, but I can't do this. That means you really need to talk to your attorney and or go to the FinCEN website and read about this and learn about it and get the filing done. By the way, what if you don't do this? The penalties are, insert your own word, I guess, draconian, massive, harsh, $500 per day that you are late. That means if you're a year late on filing it, it would be over $180,000 that you would be penalized. You also could go to prison for not filing this report. So that's why this is a big deal, and I wanted to make sure you knew about it. So last slide, what do you need to do right now? Well, the first filing is not due till the end of the year for existing businesses. So you do have time to learn about the requirements at the FinCEN website and talking to your attorney. I'm letting you know about it. That's what this is all about. However, I can't actually do this filing for you, nor can I provide any specific advice or help. If you're a sole proprietor wondering if you need to file the report, I can't advise you on that. Who are your beneficial owners? I can't advise you on that. I'm just telling you it needs to be done so that then you can go out and seek help from other resources, such as your attorney or the FinCEN website. So that's what I wanted to let you know, was that this filing needs to be done. And that's it. Thanks so much. Have a great day.